Let's take a look at euro dollar today. Of course, it is one of the key pairs in the FX space, and we've seen some good resilience from it recently, breaking above 106 once again. Hello, welcome back to our channel. My name is Daniela, and today we are going to be focusing on euro dollar. As I said, we've seen some good moves from it, breaking back above 106, and we've got quite a bit to comment on the chart technically, but also fundamentally there has been a lot going on. So before we get into it, please like this video, comment, subscribe, and turn on your notifications. So euro dollar back above 106. We've seen some good resilience from the pair last week. And of course, it comes at a time where most would probably imagine the US dollar to be favored with a lot of moves in the fundamental world. Of course, a lot of focus on tensions in the Middle East. Many have expected to see the US dollar pick up some safe haven demand on the back of that. We did see that as an initial reaction. It's kind of pared down since then. So we have seen euro being able to advance against the dollar on the back of that. Of course, US yields have been extremely important recently. So we're going to start the fundamentals off with that. We've seen the yield on the 10-year Treasury actually hit 5% this morning, the first time since early 2007. And that is significant. It really alludes to the strength in US yields, or on the counterpart, the weakness in the US Treasury market. Now, the moves, as I said, have been very, very significant, hitting key benchmarks all across the yield curve for most of these maturities. And one of the things to focus on is, of course, what does this mean for the US economy? Why are we seeing investors shying away from US Treasuries, especially at a time when, as I said, there's a lot of demand for safe haven? We've got investors and traders diversifying their portfolio, looking for potentially higher returns from safer investments. And we've seen a shift to gold as well in recent days, even as yields have been rising. So we do have that risk-off structure that you would expect with those tensions in the Middle East. But yields continue to push higher. And a lot of this having to do, of course, with the Federal Reserve and their hawkish message. They've been saying recently that they do still think inflation is too high. In fact, Powell offering a speech on Thursday last week, pretty much saying the same thing, that data is still showing a robust and resilient US economy. Inflation still high and still a key target for the central bank. So because of this, they are pretty much expecting to keep rates unchanged at their meeting next week on November 1st. But that doesn't mean that they are going to be lenient with inflation. It doesn't mean that they are going to start cutting rates anytime soon. In fact, markets are now pushing back day by day those cuts, as they do expect this higher for longer rhetoric to keep on dominating markets and dominating sentiment. So, of course, that has been seeing US yields push higher. But we also got the debt structure in the US. Now, we know the US has accumulated large amounts of debt. There's a question as to debt sustainability. We saw earlier this year the debt ceiling being pushed back by policymakers, unable to reach an agreement on that. As I said, the US government piling on debt, and with yields rising the way they have been and expected to hold at high levels, it's just going to make it more expensive for the US government to continue holding this debt. So it does bring in questions about debt sustainability. And of course, that essentially means that investors are more concerned that now than they were a few years ago or even a few months ago about holding US debt and therefore requiring higher yields for that. So all of that has been playing in, as I said, also playing into the US dollar pairs. US dollar has been pretty strong over the last 3 months, but it seems to have plateaued a little bit in recent days despite this risk-off move. The US dollar having been quite overbought recently, so not a surprise there, and has allowed the likes of euro dollar to actually advance in recent days. Now, we do have quite a busy calendar this week after a few weeks of not too much going on. First of all, we'll kick it off with PMIs in the Eurozone on Tuesday, so tomorrow. Now, the prospects for European data have been quite low recently. Now, we know that the European economy has been at a greater risk of recession than the US has been over the last few months. We now know, or seem to be convinced, that the US has achieved a soft landing. It's a little bit unsure as to whether that is going to be the case, the same for the Eurozone. So, of course, there is potentially a little bit of a negative bias on US data. A negative bias on European data. So actually seeing better than expected data from that may give a little bit more of a push to the euro. It may help it support it further as it attempts to recover some ground against the US dollar. So we'll have that first on Tuesday. Then, of course, on Thursday, we'll have the ECB meeting. Now, markets pricing in a 99.5% chance of no hike. Recent comments from Lagarde as well alluding to this, that it's potentially that we're not going to see any further hikes from them. This could be their terminal rate. But again, it's all going to be about what's going to happen now, how long are these rates going to be held for? And of course, guidance from Lagarde on this meeting is going to be crucial. What is she going to focus on? Is she going to focus on a soft landing as well? Has she seen, data holding steady and inflation improving, and therefore alluding to a robust or resilient economy whilst inflation comes down? Is she going to focus on the fact that inflation continues to be high and therefore potentially talking to further rate hikes down the line? Or is she going to put emphasis on slower growth and weakening margins in the economy and therefore the potential risk of a recession, albeit a small one, a potential recession down the line, and therefore putting a little bit of negative sentiment on investors? So the guidance of this meeting is going to be crucial. As I said, there's this decision expected to see unchanged. I don't think we're going to see much move on the back of that, based on these expectations being so high that we won't see a hike from Lagarde and her team. But of course, what is the guidance going to say and how is that going to play into the euro? And then on Thursday as well, actually clashing with the ECB's meeting, we're going to have the US GDP reading for the third quarter. Markets expecting, as of data by Reuters, expecting to see the third quarter strength actually much better than the second quarter, expecting it to rise from 2.1 to 4.2 in the third quarter. So some good numbers there from the US. Again, we seem to have a lot of positivity priced into the US, and the way the dollar has been performing recently, I'm not sure how much further scope there is for the US dollar to push higher. But nonetheless, as yields continue to move, we could see the dollar tracking along slowly. And of course, this better data would definitely feed more fuel into the Fed's higher for longer rhetoric. So we could see potentially the US dollar supported on the back of that. And then on Friday, we will see the PCE price index, which is, again, the preferred measure of inflation from the Federal Reserve. So quite a bit happening this week. As I said, still focus on the Middle East, what's happening there. Markets are still pretty sensitive to the headlines. But for now, most of this push for safe haven demand has actually gone to the likes of gold rather than US treasuries and the US dollar. So in the FX space, we do still have a lot of data dependency, and that's why this week is going to be quite crucial for that. Let's take a look now at the charts, because we do have an improved technical setup for euro dollar. Okay, so here we have euro-dollar chart, Capital.com via TradingView. As you can see here, as I was saying, the technical setup has improved in recent days. Now, something that I've been focused on quite recently is this descending channel pattern, as you can see. And we've come into contact with the upper bound of that descending channel. Now, this is pretty much the first time we've done so since the pattern was set up. The last time it happened was back here at the end of August. The pattern was only just beginning here, setting up the contact points for that pattern. So since then, it's the first time we've seen it happen. Of course, the area is much lower now because of the descending nature of this pattern, but nonetheless, it's a significant area to watch out for. Now, today we've come into contact with it, and we've already pulled back from it. The daily candlesticks actually showing there a little bit of indecision on the short term, even if we're looking at the daily chart. So in traders a bit unsure right now as to whether there's enough appetite to continue to push higher. Now, not only are we finding resistance along this descending channel, at the time that the RSI is actually also hovering just below that 50 midline. So it's at a time where investors know there's strong resistance up ahead, but also the RSI isn't showing conviction yet as to which direction is coming next. So essentially, I do think if we break above this level, if we manage to break above 106.12, potentially even would be much better if we see a daily close above this level, or whilst the RSI starts to push beyond 50, then we could see a strong bullish push for euro dollar in the coming days, really strengthening the appetite from investors to reverse the recent momentum and actually move higher. As I said, of course, there's quite a bit on the calendar this week, which will determine the momentum in the pair. The ECB, again, being one of the key events to watch out for. If we do see data on Tuesday, as I said, coming in a little bit better, it may actually give the pair enough strength to move higher. But for now, definitely showing some resistance here as is expected. Beyond that level, we do have the longer-term moving average stacked against it. So it would likely see quite a bit of resistance even to move further. Even to get all the way to 107, you can see the 50-day line resting just below there. So, of course, buyers would have to be aware that that is the next challenge to come. But at least it's kind of cleared that negative and bearish sentiment that we've had. You can see the RSI was quite oversold back here at the end of September. We managed to reset that. And of course, on the 12th of October, we did see that stronger than expected CPI data in the US, which did propel US yields higher as well as the US dollar. We managed to clear that negative sentiment and continue the bullish move higher. So for me, technically, we do see an improved setup for euro dollar. Of course, as I said, fundamentally, quite a few headwinds still to clear. And of course, the biggest one to risk appetite right now is the escalations in the Middle East. Depending on how that evolves, we may see a little bit of investor shyness away from some of these currency pairs like euro dollar and pound dollar. So for now, just keep an eye out for those key levels. Of course, an appropriate risk structure is definitely needed. Things can happen really quickly, move really quickly with so many things going on. Of course, also watch out for US yields. The 10-year yield, as I said, now breaking above 5%. Is this at a kind of a make or break it situation? Are we going to see, once that level has been hit, it's a key psychological level. Are we going to see now a reversal in yields? Are we going to continue to see them push higher? That's obviously going to feed into the likes of euro dollar on the part of the dollar side of the pair. So a lot to watch out for. But for now, it looks like the path of least resistance, at least in the short term, could have now started to point higher. That is it for today's analysis on euro dollar. Thank you so much for watching, and don't forget to subscribe to our channel.